Okay, so we're going to get going here. We'll cover off the topic tonight, which is going to be ETFs, and primarily what I'm going to be focusing on is TFSA in ETFs. So this is our TTM for October 2025 at the new location here. We're a little more cozy, but nonetheless just as good as information as we always had. The interesting thing about Bitcoin ETFs in Canada, Canada was the #1 first country to introduce ETFs. We were way ahead of the United States. The United States, as a matter of fact, just came out with ETFs in 2024. So that's kind of an interesting thing. So we're going to go over why use an ETF as opposed to just buying and holding your Bitcoin. We're also going to talk about what it means for investors, institutions, and the future influence that these ETFs will have on crypto, because it's already happening. It's been happening since the US got involved in 2024, but you're going to see pretty much a major acceleration over the next little while. And we're going to talk about some of that stuff. The presentation is going to be about 30 minutes, give or take, and we'll allow about 10 or 15 minutes for questions and answers, and hopefully you'll have some questions, and so we'll get going. So starting first off, taxable versus non-taxable. And this is kind of an important one because a lot of people don't really understand how crypto is taxed in Canada. And this is specifically just Canada I'm talking about. There are other, there's other kind of trade. Anytime there's a disposition of your Bitcoin, in other words, when you sell it, it creates a tax event, and it's called disposition. And that includes trading the Bitcoin for another crypto. Let's say you decide, oh, I think that ETH is going to do way better than Bitcoin, and you sell your Bitcoin and you buy ETH. That's considered a disposition. So that means that you have to pay your tax, or you owe tax on the crypto that you cashed in, and you'd have to pay the tax to get into the Ethereum ETF. Now, if you don't sell your Bitcoin, no tax. So even if you use your Bitcoin to buy goods and services, there's a lot of ways out there now to pay your bills with Bitcoin. Like, in other words, you can use some of the online bill paying options with Bitcoin. And when you do that, that creates a taxable event. Again, a disposition of Bitcoin. Gifting Bitcoin to someone. So if I give you Bitcoin, my Bitcoin now creates a taxable event. Unless it's a family member, or there are some special rules, but I'm not going to go into that. If you just think about it, like gifting Bitcoin creates a taxable event. Sorry?
Any amount?
Any amount, yeah.
And when you were giving it to me, you were looking at me.
No, I want yours. Oh. You got way more than I did.
Well, I got it.
Okay, so every one of those, so even if you take your Bitcoin that you have in your cold storage or that you have on an exchange and you turn that into a Bitcoin ETF, that again creates a taxable event because you're disposing of your Bitcoin, you're putting it into another vehicle. So just think about it that way. Anytime you sell it, it creates a taxable event. So based on that, what ends up happening is you figure out the price that you paid for the Bitcoin, the price that you sold it for, and half of that profit is then taxable at your current tax rate. So say you're at a 30% tax rate and you sell 10,000 worth of Bitcoin, which you've made 5,000 on, you would now owe tax 30% on $5,000, so you'd owe $1,500. That's how that works. So everybody thinks that I'm going to get my Bitcoin, half of my Bitcoin is going to go away, but that's not how it works. It works just like a commodity, like with with stocks or with gold or something like that. Whereas if you sell it, you're responsible for half of your profit is at your current tax rate. So it really ends up being not that much, not as much as a lot of people think it is.
So if the profit is 10,000, you're paying tax on 5,000.
Yes.
Okay.
Yeah. And only at your current tax rate. So if you're at a very low tax rate, like say for instance you haven't made anything this year and you're at the lowest tax rate, your tax would be at that lowest rate. So that's an important one to know. And the one thing that doesn't create a tax event is just holding it. So if you hold it, there's no tax owing on it. Doesn't matter if it goes up, it goes down, or whatever happens with it, it's not going to incur tax. You don't have to worry about that. It's a non-issue.
Yes.
It doesn't matter if you hold it on your wallet or on an exchange, same thing. It still doesn't create a tax event, and that's really important. And watching it go up and down in value, of course, that doesn't do anything. And transferring Bitcoin between your own private wallets also doesn't do anything. So if you have one Trezor and you decide that you want to put it on another Trezor, that doesn't create any kind of tax event. Or even for that matter, if you have on, say, a public wallet, a web wallet like Trust or something like that, and you move it to your own Bitcoin wallet, in cold storage, that doesn't create a tax event. You're just moving it. You're moving it from one of your own wallets to another of your own wallets. So there's no tax event there. And that's kind of important too.
That's very important.
Yeah, because a lot of people think that as soon as you move it, you got to pay tax, and that's absolutely not true. As long as you move it to your own wallet, now you can, if you're moving it to another wallet that you don't own, then that's when the tax event happens. So no tax while you're holding, taxable only when you dispose of it or sell or trade or change it into something else. And that's pretty much what we're talking about there. Selling Bitcoin, trading Bitcoin, using Bitcoin, all taxable, holding it, and it only applies when you dispose of it. So we're going to talk about tax-free savings account, because I think that a lot of people don't really know the advantages that we have with these tax-free savings account. And I'm going to show you some hard numbers here that, quite frankly, I was kind of blown away with myself when I started calculating this stuff out, how much you can save by getting involved in a TFSA. And anybody who's got a savings account, unless your TFSA is maxed out, you should be putting it in a TFSA. And I'll talk more about that in just a minute here. So this is what we're going to focus on for this presentation, is on a TFSA. There's a lot of other vehicles. There's, there's a non-registered accounts, which is just like a normal trading account. And there's also RRSPs, but I'm not really going to talk about that. Unless there's questions at the end, I can talk a little bit more about that right now. So those that don't know what a TFSA is, that's a tax-free savings account. It's not just for savings though. You can put anything in these. You can put ETFs, you can put stocks, bonds, mutual funds, and you can put Bitcoin ETFs in them. So anything is available to put into an ETF. And that's where it really becomes powerful, because you invest after tax dollars in there. So there's no deductions up front. They don't take something off when you put it into a TFSA. Your money grows and compounds 100% tax free. And I mean, this is huge. Legal tax advantages that we have in Canada, very, very few. And this is one of them. This is one of them. It's really, really a good one. And so your money grows, compounds, you're 100% tax free. You can withdraw it at any time. There's no penalties for withdrawing it. And the interesting thing about it is that everything that comes back, say for instance, you withdrew your whole, say you had 10 grand in your TFSA and you started it out at 3 grand and you took your whole 10 grand out. Well, you can put that whole 10 grand back in, but it has to be done at the next calendar year. So it can't be done in the same year. You can't take it out on July and then put it back in August. You'd have to wait till July or August of the next year. So you have to wait one full calendar year before you put it back in, but you can put everything right back in and it still remains completely tax-free. So it's really cool.
Or put more in. Obviously.
Yeah, well, obviously, yeah, and we're going to talk about that, and I'm going to give you some examples on how quickly this grows and how much tax advantage it makes over just buying your Bitcoin on a standard kind of exchange, or even just buying it and hold it in cold storage. So yeah, so that's it. So as of 2025, the annual limit is $7,000. Now, the interesting thing, though, is that TFSAs started in 2009. And right now, as long as you're 18 years old, as of 2009, you have a taxable limit of putting into a TFSA of $102,000. There's a lot of room there for tax-free money. Huge. I mean, really, really important, right? And the nice thing about it is the contribution room increases every year. So next year it'll be 109,000 because it goes up 7,000 every year. At the end of the year, they show you how much you're going to be allowed to put in for the following year. So it was $7,000 for 2025. So for next year it'll be $7,000 or $7,000 also added up with the rate of inflation. They generally add that to it. So it might be 7,500 or something like that. So, any questions so far? We're pretty clear. Okay.
Not just Bitcoin, but any crypto? Same idea? Put in 10,000, take out.
We'll talk about that.
Okay.
That's coming up.
Sorry.
Yeah, no, that's good. No, that's good that you're thinking.
ETF.
I got, you're thinking, and that's what we want, right? So their lifetime contribution room, 102,000. Annual limit right now is 7,000. And that's where we're sitting right now. So it's a great start. So what is a Bitcoin ETF? And it's an exchange traded funds, investments that trade on stock exchanges, and they do offer Bitcoin. We're primarily talking about Bitcoin. I'm not talking about stocks, and I'm not talking about mutual funds and all that kind of stuff. I'm just talking about Bitcoin ETFs here. There's, you can talk to the traditional financial guy that I had for, oh God, I don't know how many years, and he was all excited because he got me 4% a year. And it's like, oh my God, like even crypto's worst year ever, I could have done better than that. And needless to say, I got rid of him, and I have done much, much better than that. So, but you always, you're kind of traditional thinking. You always think that, oh, that guy knows something. Well, don't believe that anymore. Just believe yourself and use the AI and make sure that you learn a little bit more about this kind of stuff as well. So there's two types, right? There's it lets you access your Bitcoin without handling wallets or private keys. This is a big feature for a lot of people. Some people are really intimidated by the private keys and handling their own wallets. For some people, I do it all the time. It's not a big deal for me, and I know a lot of you people do as well. But the same token, if you're not comfortable with that, if that's something that kind of makes you uneasy, you think you're going to lose your keys, you think you're going to lose your wallet, it may be a real advantage for you to be able to deal in a traditional kind of system where all of the safety structures are in place, that if you lose something, you can get it back quite easily. And physical backed ETFs store real Bitcoin in cold storage. This is something that a lot of people don't really understand. They think, oh no, it's digital Bitcoin, it's not real Bitcoin. Well, that's not true. There are those ones that do that, and they base it on margins, but that's not what we're talking about, because I would never talk about that in the crypto group. What we're talking about is ETFs that are settled in actual Bitcoin. So in other words, if you buy 10 grand worth of Bitcoin on this ETF, they then go out and purchase 10 grand worth of Bitcoin that is then put into cold storage. So these are the ones that we want to focus on, and these are the only ones that I would ever talk about. I don't even have the other ones in the presentation here, because they're called future-backed or future-based, and they're tied to contracts that are on the CME, the Chicago Mercantile Exchange, and they're just not good. It's imaginary Bitcoin. And those are the ones that I think you talked about that are, or maybe, I can't remember who talked about it, but somebody was talking to me about it, and it was saying that these are bad for Bitcoin. And I agree 100%. Those ETFs are bad for Bitcoin because they deal in virtual Bitcoin that doesn't really exist. The ones that are dealing in actual Bitcoin are good for all of us. It's just going to increase the price and keep Bitcoin going up in value.
As long as the organization that's holding them exists.
Pardon me?
As long as the organization that's holding that Bitcoin on your behalf exists.
Well, yeah.
Disappear.
Yeah, but you're talking about some of the largest ones in the world.
Well, Lehman Brothers.
Yeah, exactly. Yeah, it's always a possibility, and that's one of the difficulties that you do face in doing this, rather than holding your own Bitcoin. But it's not for everybody, and the whole idea of this is to look at the whole ball of wax, because let's face it, sometimes these kind of things are an advantage, and so we want to look at every advantage that we can get. And maybe you want to hold some of your Bitcoin in cold storage, and maybe you want to look at some of the ETFs. I mean, that's entirely a personal decision. So both of these kinds of ETFs give Bitcoin price exposure. In other words, the ones that are based on real Bitcoin, on spot Bitcoin, are the best, because they're based off the Bitcoin price. And you'll see when I do the chart that's coming up, I think in the next one or the one after, you'll see that it follows Bitcoin like exactly. Like this chart that you see here, if I was to pull up the Bitcoin ETF, the one that we're going to be talking about, which is FBTC, and it's based off the Toronto Stock Exchange, so it's in Canadian dollars, you're going to see that it follows Bitcoin exactly. The exact chart of that ETF is following Bitcoin, and it's very interesting to look at it. So,
Can I ask Strike, Ledden, BlackRock, maybe Fidelity? Are they okay?
well, it depends on where your comfort level is. Those are all US-based ETFs, which I don't want to be involved in myself. I don't want to give my money to a US-based ETF, but that's your own personal choice. So most of these are held, like the good ones that are based off spot Bitcoin, are held with exchanges that have proven to be good, and some people will hate them, some people will like them, but anyways, they've proven to do a good job with cold storage. Gemini and Coinbase being two of the biggest ones. Some of the largest amounts of Bitcoin in the world are being held on these two. They've proven themselves through all the rocky roads that have happened over the years. The SBF scandals and all this kind of stuff is all, they've weathered all of those storms. So they're still pretty good. And they're under strict cold storage regulations. So when it's involved in Canada, like when you're doing your ETF through Canada, it's also covered by the Canadian Deposit Insurance Corporation for up to $1 million. So if something should happen to that ETF, the government does back it up to $1 million. So it's a good thing. I mean, it's as good as you can get without owning your own Bitcoin on your own hardware wallet, which is always the best, but there's place for everything in this, and we'll talk about that a little bit more. So Canada does have the first mover advantage. Canada was the very, very first one into ETFs. The Ontario Security Exchange Commission authorized them in 2021. And it was, the first one was called BTCC, and then 2022 was EBIT, and then BTCX 2023, and then 2024 Fidelity came in. And Fidelity is the one that I'm going to talk about here, primarily because Fidelity's fees are among the lowest. So the whole objective in this kind of scenario is you want them to take the least amount of your Bitcoin for managing the ETF. And that was my objective in looking at this. Interestingly enough, though, there's over 2.5 billion on these Canadian ETFs, so it's not a small amount of money, and a lot of them are purchased through RRSPs, TFSAs, and that's the primary focus on these ETFs. That's how they're handled. But you can look on any of your, if you're dealing with with TD Bank on their stock exchange, or if you're dealing with Wealthsimple, which is one of the ones that I recommend and I deal with, you can just look up these ETFs right in the application, and you can buy right from the application. So it's super easy. And by the way, Wealthsimple, I've had quite a bit of experience with Wealthsimple over the last little while, because once we sold the building, we decided to go with Wealthsimple and not the traditional banks, because traditional banks charge you money for having an account, and Wealthsimple actually gives you money for having an account. It's like a complete paradigm shift. So, but that's a whole nother story. We'll talk about that maybe another time. All right, so as you can see, Canada was way ahead of the group. There's just not the amount of money in Canada that there is in the US. So there's not as much that went in. So although Canada had that first mover advantage in 2021, so they were regulated. They were by regulated crypto custodians. I can't remember who did it, but it was a large Canadian exchange. Hopefully not Quadriga. But things have improved a lot since then. And they're in Canadian dollars and US funds only. So any of the US based ETFs, they are not. They're only in USD, but they had massive inflows. And BlackRock and Fidelity, you see in 2024 came in. Fidelity came in with the Canadian one in 2024. And that's the one that I've based our numbers on. But BlackRock also has that. The Canadian Fidelity one is based off the Toronto Stock Exchange, so it is dealing in Canadian dollars. And so Canada got there first, but of course US has tons more money, and they got in there. They got in there and they just started swamping it. And that was only a year ago, only like 2024. So a lot of people believe that the success of ETFs was as a result of Canada, and that the SEC actually went in because of Canada. Like, they were very resistant to anything to do with Bitcoin ETFs until they saw how successful Canada was since 2021 up to 2024 in dealing with it. And of course they saw that there was money to be made. I mean, let's face it, that's ultimately what it's always about. Okay, so now we're going to talk a little bit about institutional adoption and market trends. So the interesting thing is that ETFs have really given a shot in the arm to Bitcoin and to crypto. And there are some other kinds of ETFs, as Andre was alluding to just a few minutes ago there. And the nice thing that a lot of people like is that it fits comfortably into your portfolio. Like, if you have an existing investment portfolio, you can just roll this in there. It's all compliant. CRA likes it. There's no issues with doing it. It's not a problem. It fits right in with the reporting frameworks. And there are some newer versions. There's Bitcoin and Ethereum ETFs that have just started coming out, so they're doing a blended Bitcoin and Ethereum. There may be some Bitcoin or some Ethereum ones coming out on their own. Hasn't happened in Canada yet. I think the US has one, if I'm not mistaken, but Canada hasn't happened yet. And there's also ones like the environmental, social, and governance. They're mixing that in with some of the Bitcoin ETFs as well. And the chart just shows the growth. That's 2021 and that's 2025. And this is Canada only. So you can see that the growth is just absolutely phenomenal. It's just exponentially growing up, and that's going to continue in the near future. It's not going to slow down. It's going to get faster. Okay, so this is the interesting one. So ETF performance versus standard Bitcoin. This is like the chart over there I've got up. That's Bitcoin. That's a real-time chart showing what's happening with Bitcoin right now. And it's at 108,537 US right now. I think it's about 155 Canadian. Yeah, 155 Canadian. It's been fluctuating a lot over the last few days, but the ETFs pretty much mirror Bitcoin's price. The only difference is there's the MERs, which are management expense ratios. Different ETFs charge a different ratio for managing these ETFs. Some of them are very low. Some of them can be quite high. Like some of those original Bitcoin ETFs that we talked about just a couple of slides ago are actually pretty high. They're almost 1%, some of them. Whereas with Fidelity, it's at a 0.32 or 3.5 right now. It kind of fluctuates between that. So it really doesn't add a lot to your costs over the course of a year. And Bitcoin generally, you know, it can pick up 0.3. It's not too hard. So that's why if you look at that chart, and I know it's kind of hard to see, but one is Bitcoin and one is, the blue one's Bitcoin and the yellow one is the Bitcoin ETFs. And if you'll notice, it just follows it. It follows it pretty much bang on. Less than a 1% ratio between the two at any given time. So it's almost bang on with Bitcoin. And again, we're only talking about spot Bitcoin ETFs that are settled in actual Bitcoin. So it kind of gives you a peace of mind. You know that it's going up with Bitcoin and you don't have to, again, navigate wallets, security keys, and all that kind of stuff. You're kind of getting your Bitcoin investment in a traditional kind of way. So it's not so bad. And a lot of people really like them. The management expense ratios are small, and CRA likes this scenario. So this is where we get to the risks and considerations. And you know, Brock brought up a good one. There are risks. I mean, there's no doubt about it. You're not my keys, not my coins. So the only way you really own your Bitcoin 100% is if you have it in cold storage and you own the cold storage wallet, and you keep the wallet up to date, and you don't lose the keys, and you don't lose the wallet, and you know, things don't happen that would catastrophically make you lose your Bitcoin, which unfortunately for a lot of people I know, including myself, have lost a lot of money even when you're being diligent and careful. So, but what it doesn't do is it doesn't change the volatility of Bitcoin. Bitcoin's still going to go up. Bitcoin's still going to crash. And these ETFs will do the same thing. They're going to follow Bitcoin. Whatever Bitcoin does, that's what's going to happen here. Regulatory uncertainties and potential impact of new legislation. Like they're happy with it now. CRA says it's great now. We don't know that next year or the year after they could change that. They could say, oh, by the way, now we're going to tax you at 40%. We don't know. And there's, you know, it's law, so they can write that law in at any time. But if you're following all the rules and you're buying your Bitcoin through any exchange now, they know all that already anyways. So you're still going to have to deal with that, whether it's through traditional Bitcoin or through an ETF. Unfortunately. And of course, custodial failures. Like we know what happened with Quadriga CX here in Canada. We know what happened with SBF. You know, these things happen. These exchanges go down. Nice thing is, at least in Canada, if you're dealing with a Canadian ETF, you do have the Canadian Deposit Insurance, which helps. It gives you a certain amount of comfort. If something happens, you'd get back at least $1 million. So if you have a significant other, you could significantly get back, say, $2 billion if you have it split evenly.
Did you lose money on Cox? None of my business.
No, I don't leave money on exchanges.
Oh, yeah.
Never have. Now, wow. ETFs are a little different. I don't see them as exactly the same thing. Same thing with Quadriga CX. I never lost anything on Quadriga CX either. A lot of people that I know lost a fortune, you know, because they had all their crypto sitting there on Quadriga CX. And
he was cremated in India. Well, I want to be cremated while I'm still alive.
Yeah, exactly.
Allegedly.
Yeah, allegedly. No one actually, nobody has proof.
Yeah.
You know?
Lost my Bitcoin and
imagine what the Bitcoin that he had is worth now.
Yeah.
You know, it said that he had 250 million US at that time. It'd be worth billions now.
Yeah.
So he's probably one of those, he probably had pigmentation surgery and bought a sheik's harem somewhere. You know?
That's what I had, and it ended up really bad. Look at my face.
Yeah, amazing. And they charge you for that.
You said, yeah, I'm supposed to say no.
Lost man in a boating accident.
That's right. So yeah, custodial failures are a factor. Tracking errors are minor, so they're not really something to worry about. Like these, the tracking errors, where like one of the weird things that if you get involved with an ETF and you decide you want to buy Bitcoin, which happened to Stacy and I, we decided on Saturday we wanted to buy Bitcoin on the ETF, and it's like, can't do that because they're basically 9 to 5 operations, or 9 to 4, most of them. So unless you're working during regular business hours during the week, you can put your order in, but it doesn't mean you're going to get it at that price. So that's a consideration. It's not like Bitcoin, where you go to buy Bitcoin, you buy it now, you get it at the price now. So if it drops way down, you can go on your exchange, you can buy it, and you got it right now at that price. Because it's 24/7 trading. That's not the case with ETFs. It's more like stocks or bonds or mutual funds. You have to be during regular working hours. All right. So, taxation of Bitcoin ETFs in Canada. This is, they can behave completely differently depending on where you hold it. Like, there's 3 different ways that we're going to talk about here. We're going to talk about TFSA, which is tax-free savings account. It's best for younger investors because it gives you more time to accumulate more with that $7,000 coming every year. And again, as long as you're 18 years old on 2009, you have a total deposit available of $102,000 that you can put in tax-free and take out tax-free, which is really important. RRSPs are really good, and they can do similar kind of things, but of course RRSPs, you're still going to pay taxes when you take them out. Now, theoretically with RRSPs, when the time comes and you're ready to start taking it out, you're going to be in a lower tax bracket, so you're going to be taking it out at a lower rate. But the thing... Yeah, exactly. You're taxed twice. So you got to remember that RRSPs are not that great for this kind of an investment because you're going to lose like whatever your current tax rate at the time is. When you cash out that ETF through your RRSP, you're going to be taxed at that rate. So you've put, like Andre said, you've put tax money in and you're getting taxed again when you take it out. So you're getting double taxed in essence with RRSPs. So they're not that great.
RRSPs are great if you plan on being poor.
Yeah, exactly. Or you plan on not having any income when you retire, and you're just going to get the minimum tax rate. And then if you were at a very high tax rate when you bought all your crypto and you put it into a put it into an ETF, and you're ready now to take it back out at the lowest rate possible, it can work. It's better.
What was the inflation rate when you bought that RRSP versus now?
Of course.
You lost in inflation.
Of course, yeah. But at least if you're investing in Bitcoin and it goes up dramatically when the time you're ready to cash it out, you may be able to absorb that much easier than you would with, say, a traditional investment. Like we talked about earlier, those traditional investments they're bragging about getting 3 or 4 or 5% a year. Like, that's not going to cut it with inflation the way it is. Well, some of them are a little higher, but some of them are lower too.
So a self-directed, your normal RRSP is usually 1% that they give you.
Yeah.
So you'd have to go with a self-directed.
Exactly. Yeah, exactly. So there's TFSA, there's RRSP, and there's non-registered account. A non-registered account, basically, it's just like buying it on an exchange. Wealthsimple is just an exchange, and you're buying it, and you're subject to that 50% of your profit is taxable as capital gains. Again, based on your current tax rate. So there's really no advantage in that scenario. Like, you're buying your crypto the same as if you're buying it on an exchange, and it's just a non-registered account. So even if you're doing it through Wealthsimple or TD or whoever, well, TD doesn't sell it, but Wealthsimple does sell crypto.
But who?
Wealthsimple sells crypto. A lot of the top cryptos are available on Wealthsimple.
They're good, eh?
Wealthsimple's quite good, yeah.
Bitcoin Well, how about that? Goes right to your wallet.
Well, Bitcoin Well is actually they're the Bitcoin ATM guys, and you're going to pay a premium through them. You're way better off buying it through a traditional exchange than those guys. I know that. I know the guy who created that, and yeah. Okay, so RSPs let you high earners defer the tax. That's all it does, just defers the tax. You still got to pay the tax. And non-registered, you're going to pay your normal that you do. Some ETFs. So you got the same ETF. You got 3 different tax incomes, 3 different accounts. So choosing your tax shelter is a smart thing to do, to choose the right one that'll work for you. Okay, so this is an interesting one. So what I did with this one, because 2023 to 2024 was not a great year for crypto. Let's face it, it was kind of in the ditch and doing kind of bad. So I thought, okay, well, let's pretend that we bought 10 grand worth of Bitcoin at the beginning of 2023, and then let's see where we would have been at the beginning of 2024. And that's what this is based off of. So I based this off of the FBTC on the Toronto Stock Exchange because it was available at that time. Both investments started with 10,000 Canadian. We go from 2023 to 2024, and both grew about 60%. So there was a nice return. So started 10,000. At the end of the year, we ended up with 16,000. On the ETF side, 0 because it's tax-free account. On the traditional side, we owe $955 in tax if we cashed it out at that time. We could hang on to it, but at some point, we are going to have to pay that tax. And that ends up being $15,400 after tax, or $16,000 after tax if you have it in a TFSA. Same investment, same growth, but the TFSA ultimately keeps more Bitcoin in your pocket because you don't have to cash your Bitcoin to sell to pay the tax man. So, and again, that's only if you're selling it. But the same thing would apply. Your ETF, you can take it out and you don't incur a tax event. Whereas where if you just have it in traditional Bitcoin and you need that money for something, you're going to pay that tax. One way or another, they're going to get you, right? So, and it would be taxed at, just like we talked about before, capital gains tax, 50% of your profits. So when you combine Bitcoin ETFs and TFSA, you're basically compounding your gains, and you're doing it in a way that CRA can't touch. So, it's arguably a safer way to do it. So then the next one that I did, which I thought was quite interesting, I couldn't base this off of the Fidelity ETF because the Fidelity ETF wasn't in existence. So we had to base it off of some of the first Canadian ETFs that were available. And I thought, okay, well, ETFs were only available from 2021. So let's base it off of 2021 till now, till 2025. And let's see what would have happened. And it's actually really, really interesting what happened. So your total investment is about 32,500 Canadian up here. And that was your maximum allowed investment each year from 2021 to 2025. Now, the interesting thing is that the ETF returned 165,400 because it's tax-free. On this one, you've got 14,900 available in tax. So you end up with 18,300 more after-tax profit doing it through the ETF. So it's a pretty significant amount. And that, again, is only a $32,000 investment over 4 years. I mean, that's not outside of anybody's capabilities if they're determined enough to make that kind of an investment. And it makes a big difference. So you get tax-free growth, tax-free withdrawals, no CRA headaches. And the nice thing is you got almost 0.7 of a Bitcoin if you did that over that period, and you'd be able to keep all of it. Whereas, let's say, for instance, you needed to cash that whole thing out. You would have to cash it out, pay your capital gains tax, and not have your Bitcoin anymore. So it's a really, really good thing. With the TFSA, you could sell a small portion of it. If you got that money back, you could put it back in next year, and you really wouldn't incur any kind of costs or any kind of difficulty by doing that. So, conclusion. So Canada took the first steps. They created the first Bitcoin ETF.
Anywhere in the world?
Yeah, first in the world. Yeah. TFSA is a vehicle that CRA approved, and it works. It's good. And the nice thing about it is it's available to everyone. And you can get your maximum amount in there if you're lucky enough to be able to save that much, or if you sell a property or you have another way of getting that much in there, and you can take it back out as needed tax-free. So it's really, really a win-win kind of situation on that scenario. And, well, that's my guy, being happy as it goes down in price. Because if you want to leverage in, now is the time to do it. We probably don't have that much time. We probably only have 3 months, 6 months on the outside before Bitcoin really starts pumping again. And that could change almost immediately if they settle all the issues with the United States. Because, of course, Trump is pro-Bitcoin and pro-crypto. And if he settles some of the issues that are going on, we could see a major, major jump in Bitcoin. We could see it back over all-time highs, create new all-time highs within a week, 2 weeks, once that happens.
The wars, or what kind of problems?
Well, the shutdown of the government, right?
Oh, yeah.
Until that gets resolved, things are going to be pretty volatile for a while. But that creates a buying opportunity, really. It's a great opportunity for anybody that wants to leverage into an ETF or purchase crypto or whatever you want to do at this point.
One thing they're working on is with the ETFs having where you can stake. It's
Yes.
a big thing right now.
Yes. I have.
Doing what, sorry?
Staking.
Oh,
So all these rich people like BlackRock and all them who have tons of Bitcoin, they want to stake it now.
Yes, yeah. And get returns from that, yeah.
Why do I want anybody but me making money off my money?
yeah. Exactly.
Well, they're only making, you're still holding it, they're only making the management fee, that's all they're making,
They're still making money on it.
0.3%. I mean, if you sell it on a traditional exchange, they're gonna charge you more than that.
But I just hold on to it myself.
You're keeping
Yeah.
the whole network going and being safe. That is your role as every Bitcoiner, even if you have like $10 in it and you're in Africa.
And the final one is, I've got my Wealthsimple invite code on that. Anybody that creates an account on Wealthsimple gets 25 bucks, and I get 25 bucks. So it's a really good win-win kind of situation, as long as you create any kind of account with them. So it's really a good deal, especially if you just want to learn about it and play around with it. Like, I started using it a lot more. I got involved with it. Sean, one of the original CryptoNutz people, told me about it, because the nice thing is that they pay you, even on a checking account. They're paying you interest every single month for having money in their account, which at the bank, I'm paying every single month to have money in their bank. And that's why the banks are going so hard and heavy against Wealthsimple, because they don't like the fact that they're doing things that banks are not willing to do, because they've got to make their record profits every single year.
Right, exactly.
That's why they don't like stable coins.
Exactly, yeah, exactly.
Are
So,
they going to close them down, do you think? Possible?
oh no, they're doing gangbusters right now. And I mean, it's now at that point where you can get, like, you know, I've got MasterCard, debit card. You can use it anywhere you can, MasterCard, and it's tied directly to your Wealthsimple
That's
account.
from Wealthsimple. Oh, okay.
Yeah, and they pay you interest every single month.
Breaking through the chains, we're taking more.